So hello everyone. I just wanted to pop on. Today is Tuesday, so we release our episodes on Tuesday. And there are a couple of things going on. So welcome back for most of us who are in the US. We just celebrated the 4th of July holiday. I hope you had a safe time with your family and friends and hope you enjoyed your holiday. But I wanted to talk about financial markets today because the markets are tanking and people are panicking, and I love it, honey. So one of the things that you will find out as you become more familiar with financial markets, investment markets, is that the markets have cycles. And so now, as summertime has just started, Q3 is underway, and we're heading into, like I said, the summer, and then we're going into the fall. And 9 times out of 10, as we go into like August, September, October, that time frame for markets tend to be a little turbulent, if you will, in regards to things going in a downward spiral. And so the good news is that number one, that's normal. And so I don't think you should panic if you have money in the markets and all of a sudden you're seeing your portfolio reduce like maybe 10, 15, 20%. That's normal, and there is nothing to be concerned about because like what goes up must come down, right? And so one of the things I teach in my strategies in my course is how to maximize in the markets, whether they're going up or down. Like when you're a boss, you know how to make money in and out of season, period. Not just a boss, an investment boss. Let me be specific about that. But you know how to use money to make it work for you. And so for me, as an investor, as a trader, I do not care whether the market is shooting to the sky or whether it is tanking to the valley. I trade in the zone. And when I say I trade in the zone, I trade in my zone of genius in what I know to be my most significant strength. And for me, so like you'll hear a lot of people talking about Q3 being a very turbulent time. Yes, it's a very turbulent time in the markets, but I'll make so much money during Q3 when I start trading that it is ridiculous. And I love trading in bear markets. And so Nicki Minaj has this song called Bees in the Trap. Like, I stay trading in the trap. I called myself when I first started trading, when I found out trap trading was like a strategy, child, I used to call myself the trap queen, okay? Because I make so much money in the trap. And if you know what you're doing, it's a trading strategy. If you know what you're doing, like I said, you can manage your money to the point that it doesn't have to freak you out when you start seeing losses in your portfolio, because that is a given, right? You're going to make money and you're going to lose money. That is a part of being an investor. But I don't think you should freak out when you're losing money in a short time frame, right? You have to give the market time to do what it do. And it wouldn't be markets if it wasn't if it wasn't going up and down for, I guess, normal cycles. So a couple of things while we are talking. Here's a few points. I'm going to touch on 3 quick points that I want you to do in your portfolio to make sure you have your pulse on the portfolio and make sure everything is going according to, even if it's not going according to the way you expect it to go. Here are 3 things that you can do to make you feel better and manage your emotions while we're going through the changes in the market. So number 1, you're going to assess your current portfolio, and you're going to look to see if the assets in your portfolio are performing at the level that you want them to perform at. And if they are not, and you feel like you should unload some of them, then remove them from your portfolio and then reinvest your capital elsewhere. Or you can just let your capital sit in your account and get back in the markets when you feel like it's a better time. But for me, when the markets start taking like this, to me, that says to me the market's on sale, right? And so I go in and I start buying up stuff. That's what I do. That's what I've been doing all of these years. And so, like I said, you're able to assess whether or not those assets are working for you. And if you don't want to be in the commitment of participating in that asset class or in that asset anymore, then get rid of it. You want to assess your risk tolerance. And so if you feel like you've lost a lot and you don't want to redeploy that capital into another investment, like I said, sit on the sidelines. You want to identify what's impacting you the most and figure out how to go forward with a strategy so that you can make your money back up eventually. And so the second thing is to take strategic actions during a downturn, which is basically some of what I just said. Strategic actions meaning if there is a percentage that you have given yourself in regards to capital gains and losses in regards to your portfolio, if you're hitting that range in regards to losses, like I said, pull out the market if it makes you more comfortable and put your money in something a little more safe until you're comfortable getting back into the market. Safe havens like bonds, golds, high yield savings accounts. Very rarely will you hear me say put your money in a high yield savings, but sometimes sitting in cash on the sidelines is the thing to do if you're not comfortable with the risk you have been taking in your portfolio. And then number 3 is, you will hear me preach this over and over again, is have a long-term perspective on your portfolio. Sometimes I like to say it doesn't happen overnight, because I can't really say that, because sometimes you really do make money in the gap during the day, on the hour and 5-minute trading time frames. And so it depends on what type of strategy you have in regards to what's in your portfolio that you're managing right now. And so if you're day trading, swing trading, or long-term trading, you have to learn overall as an investor to have a long-term perspective to your money being in the markets. And so I was listening to a podcast the other day talking about how she manages her crypto portfolio. And I completely disagree with the way she was handling it, because she said that with the markets, when the markets are in a winning zone, she goes in and she takes profits and then she redeploys that profits and buys more. But my concept is like, well, if you're going in and taking profits and going back and buying more, aren't you just spending more on the back end when you go back in and buy that asset? Why wouldn't you hold on for dear life with your asset and just not sell it, right? It makes no sense for me to buy asset low, let it go to a price high, take the gains, and then go back in and buy that asset again at a lower price, but a higher margin, if that makes sense. You might as well just continuing to DCA, dollar cost average, your position over the years and hold it over the long term and let it mature. And so I like to tell people, especially when we're looking at the new asset class of crypto, to start thinking in a long-term perspective, opposed to just holding something a day or 2 days or 3 days. Very rarely will you hear me talk about holding something a day or 2 days. When it comes to my crypto portfolio, I hold long term because I know the time value of money increases significantly over time. And so that is one of the things that I am going to continue to drill into my frameworks and my strategies that I teach while I'm teaching my students in my course, Pennies to Profits, is that you have to have a long-term perspective on building your portfolio. Although sometimes you may have short-term strategies, i.e. day trading, i.e. swing trading. I get that. and you're trying to get in and get out and capture quick money. I get that. There's nothing wrong with that. But the overall strategy for your portfolio, I highly encourage you to think long term in regards to how you invest and deploy your money. Again, this is not financial advice. I've only been working in the financial markets for 18 years. But like I said, I'm not your advisor. I am not a licensed financial broker advisor. So you take the information that I'm telling you as it resonates. And if it works for you, hey, I love it. So I think that is all in regards to covering market updates. And so let's go back over the 3 points that I mentioned. So number 1, you're going to assess your current portfolio and manage the risk. Number 2, you're going to take strategic actions to take that make you feel better during the downturn if you're feeling uncomfortable with the losses that are showing up in your portfolio. And then number 3, you're going to have to take a long-term perspective and have mental resilience to managing your money and your assets. And I say this, and I will keep saying this, I want you to be your own financial advisor. You shouldn't have to hire somebody and pay them 4 or 5% a year to manage your money. You need to know what your money is doing, and you need to be comfortable enough to make decisions in regards to managing your money because you're a boss like that, period. And I'm not saying there is anything wrong with having a financial advisor. I just encourage the freedom, the economic freedom of owning your money and how you invest it and what you do with it. So I think that's it for me for today. As always, you can check us out in the show notes. You can check out Rashida.ai. It has the information for my course, or you can check out RashidaMcLaren.com, which has, again, information about my course, myself, our freebies and things like that. You can always find me on social media on Instagram, TikTok, and Meta, and Twitter. And I think that's it. That's all for now. I will see you guys out there in the game. Bye.